we're live in the Facebook group, so I can't see how many people are here, but so just to introduce everybody, we've got Vicki, the leader of this group, who is in her condo in Puerto Vallarta, which I really wish I was there, because the last time we did a live, we did it with tequila. Now we're doing it with water, and I'm here in Colorado. And then we have Howard, the CEO and chairman of Debt.com. And welcome to our summit. So we're just going to start. I've got a couple questions for each of you. And then I think what we'll do is open it up for questions for others. So Vicki, I want you to start, and I want you to explain to Howard, as well as the new members of the group, kind of what was your inspiration for starting this group, kind of how.
Yeah, well, actually, this started prior to COVID. Analisa and I actually discussed this back in early 2019, and we were very, very interested in some of the comments that I've been getting in from the viewers of the show, The Real Housewives of Orange County. And many of you don't really know what I did on a day-to-day basis. So we thought we could open this up to somewhat of a tool that people can use to refer back to when they're contemplating, should I get into debt? Should I buy a new home? Should I refinance? How do I plan for retirement? There's just so many things that I know that I couldn't obviously talk about on The Real Housewives of Orange County, because that would be boring. So Analisa actually came up with this idea, and we vetted it out, and we realized that, you know what, there is a need. And we have over 5,000 members. It's a free Facebook group. We're offering some paid subscriptions and things like that, just because we have to cover our costs. It's not like we're ever going to, be super profitable on this. We just hope to break even one day. But right now, it's been really exciting. There's just a great group that I'm working with finally. We've gone through some bad seeds, and I'm sure, Howard, you can relate to that. When you're building a company, we had a couple bad seeds in there. We had to weed them out, get them out, and I'm super excited to have Debt.com on this call, because I think that we've all, through our life, unless you've been handed a trust fund, which most of us haven't been, have been in debt, whether it's a mortgage, whether it's a car payment, whether it's just debt. And we are seeing debt rising because of COVID and jobs lost and income lost. And, it's affected me in my practice. We can't do seminars. I can't see people. So we're having to be a little bit more creative with how we do our planning. But I feel like this is a huge, huge void in so many people's lives, whether you're a female or a male, whether you're a teenager, college kid, or whether you're almost 6 years old like me. This knowledge is huge, and I'm just super excited to see where this is going to go.
So. Howard, will you share with us, an overview of Debt.com, kind of how you came about with this, and how you're helping people? I've got other questions for a little bit more detail as well, but just kind of a brief overview, if you will.
Okay, I'll do my best. First of all, thank you for having me today. I've been around the debt world virtually my entire career. I'm a CPA. I have a CPA as a background. I was an accountant in a very sophisticated tax practice in Washington, D.C. And during the late 80s, I was involved in some very complicated debt restructuring. From there, I asked myself the question, what do normal people do that can't afford high-priced accountants and lawyers? And I went on a quest to find that answer out. And then I created a company called Consolidated Credit Counseling, and I built it from my kitchen table, believe it or not, where all great businesses are built or started. And after a while, we became the largest credit counseling agency in the country, actually in the world now. From there, it was clearly apparent that I only could help 10% of the people that were contacting us, because I was virtually put into a box, and all I had to do was sell them what's called debt management programs. And I didn't like that. I wanted to specifically have a program that fit the needs of the people that were getting in touch with us. And as such, Debt.com came about, and we have now built it to be the premier site, and it's a one-stop shop if you're in debt. Essentially, we call it the Amazon of debt. And why? Because whatever your debt problem is, whether it's credit cards, it's mortgages, it's student loans, it's tax debt, whatever the case may be, we're there to help. And basically, it'll provide education. Our site provides education, it provides counseling, it provides advice and services. And the only thing you're going to pay for are the services if you choose to get involved with us. But all that education and all that is absolutely free. We are here to help as many people as we possibly can. And we've been doing it. I've been doing this for almost 3 decades. So there's not a lot of things that I don't know about debt. In fact, I've written 2 books on it, probably going to do a third at some point when I have a couple hours or more. But at the end of the day, you know, I am just so thankful that Vicki and you, Analisa, allow us to converse with your followers, and we're happy to help in any way we can.
Great. Thank you so much for that explanation, because, you know, when Vicki and I are doing the research for this, obviously debt is a big component towards financial wellness. I mean, there's many pieces to the puzzle, but debt is definitely a component, and we appreciate your collaboration with us, because it's invaluable to have experts such as you on here. So the next question is for Vicki, and you know, in your professional opinion, what do you see as the biggest obstacle to financial wellness when it comes to debt?
Our biggest obstacle is people not reaching out and getting advice and getting help, because if you can tackle this all on your own, if you're in credit card debt and you're paying 25% interest on some of this, you're never going to get that paid off. It's just almost next to impossible. And then you start to spiral down, and you know, we're not making 25% in the bank, so we shouldn't be ever paying more than what we're paying out in what we're getting in growth in our accounts. But the problem is we get into a cycle and we get caught without a paycheck, and I get it. And then we get, you know, one credit card, and then we open up another credit card, and then we try to consolidate those credit cards, and you know, we've got a high interest rate, which to me is just a nightmare. These student loans, I've got clients coming in saying, you know what, I took a second mortgage out on my house to pay off my kids' student loans. And Howard, what is your viewpoint on that? Because obviously we're going into our asset into paying something that, you know, there's grants out there, and there's lots of creative things you can do regarding these kids' colleges. But I'm sure, Howard, you see these student loans being a big handicap for a lot of people, especially seniors who are approaching retirement, right?
Well, credit cards are evil in my book. I mean, they are meant to get you hooked on this. Yeah, exactly. Oh, I like that. The fisheye.
They really is.
But at the end of the day, I mean, there's a lot of things, not only seniors, but you put a very interesting thing. People take second mortgages out on their homes to pay off their credit card. They do 2 totally ridiculous things. Number one, they take unsecured debt, which are the credit cards, and then refinance that debt with secured. So if they get in trouble, they get sick, they could possibly lose their house, rather than if they got in trouble and got sick, the worst thing that happens is they default on their credit cards. They don't lose their house.
Right.
The second thing is, and what I have seen time and time again, is those same people that come up with this great idea to pay off, refinance their mortgage, pay off their credit cards, they tend to leave the credit cards open. And guess what? They go shopping. And all of a sudden, they have 2 years, 3 years later, they have the same amount of debt, and they have no more equity in their house either. So that is a huge problem that I always see. With regards to student loans, it's a terrible thing this country is in. And there's no easy way to fix it. The problem you have is that student loan debt is larger than credit card debt right now. And it lasts for 25 years or more. It could last.
Interest. Yeah.
There's tons of programs out there that are available to help eliminate student loan debt, but not a lot of people know about those programs. And frankly, because the government doesn't advertise them, but they are out there. And if you're interested, on our website, we can show you where to look and how to get out of student loan debt very fast.
That's extremely helpful. I mean, I've got clients, that are doctors, physicians, in their 40s that still have medical school debt. I mean, I discouraged my own kid from trying the medical school route. You don't need to be $250,000 in debt to be able to make money.
But Analisa, you're right. However, there are ways to eliminate your student loan debt if you work for a nonprofit.
Correct.
Or a government. You can eliminate it in 10 years.
Right.
For 10 years and it's over.
I looked into that because what I didn't like is I don't want my kid to come out of college in extreme debt if I can help it. And the way that you eliminate it is you have to pay on that debt for 10 years before they remove it. And they're only removing the balance. They're not removing the entire loan. And I'm like, it just didn't make financial sense to us. But it is nice that there are those. But here's the next question I had for you, Howard. And that is, what do you see as the biggest consequence of consumer debt?
As I said before, debt is evil. All types of debt, credit card especially. But credit card debt and debt in general creates stress on the person that's in debt, stress on the people around them, their family, their friends. It destroys families. I mean, I can't tell you how many times I have seen many relationships get destroyed because of the financial pressure. In fact, debt in this country is destroying families. And the number one reason for divorce in this country, which 50% of all marriages end up in divorce, but the number one reason, guys, is financial pressures. And that's sad. So that is a very big consequence. But it doesn't have to be that way. It never had to be that way. For some reason, Americans think that they have to be in debt because their parents were in debt. But that's not the case. They don't need to be in debt as long as they aggressively attack the debt. They can knock it out in 3 to 4 years. I can tell you personally, you're talking to somebody that has zero debt, that owes nobody in the world. And I'm not saying this to brag. I'm just saying that I am incredibly anti-debt. And you can be too if you adopt the strategies that we talk about today.
Yeah.
Let me go on that notion for a moment. I think a lot of parents have been handicapping their children by giving them too much too early on in life and then sending them out of the nest. And these kids, these 20 to 25 to 30-year-olds, want to live how they were living when they lived at home with their parents. The nice car, the nice house, the nice furniture, the great trips. And I see it with my son's friends. I'm sure, Analisa, you see it. And your kids are a little bit younger than mine. My kids are 34 and 35. They believe the way I believe. We pay for what we can afford. You don't buy things you can't afford, and you save. And you save and you save and you save. Because there's going to be a rainy day. There's going to be a COVID where work goes down. And if you've got an extra $500 a month or $1,000 a month, don't go spend it. First, pay down your debt. and then start saving it. So Analisa, we've created that great budget book and some other creative things. But I think that's our problem. Our kids, our young generation that's moving up in line wants to live the lifestyle that they did when they were living at home with their parents. Yep. And sometimes you have to take living in an apartment or not, or having a roommate, or, sacrificing to get out of debt, start saving.
Yeah.
You make a very, very interesting point there, Vicki. I mean, raising children, whether children of affluence or just, everyday children, they want to live the life of their parents. And the fact of the matter is, we live a better life than our parents did, no question. However, our children will probably not live a better life than us, just simply because the costs associated with the cost of living is much, much higher, many distractions. I will tell you that I have seen the same, and a lot of hunger. They need to get hungry, these kids. And I'm not sure they have it. So it'll be interesting to see how the movie ends.
I agree. Vicki, I have another question for you, but before, I just kind of along that lines, and you're talking about the budgeting book. And Howard, I don't know if you know this, but Vicki did write 2 side hustle books. And, we do feel that side hustle is a big help to maybe eliminating debt or preventing you from going into debt just by having that extra source of income. I mean, no one could have predicted this. Vicki and I've had so many conversations, like, did you ever see this coming? Like, if we talked a year ago, would we ever been able to predict COVID and like people losing their jobs? And I mean, I've got clients that are radiologists that are out of work, and there's more job security for the Amazon driver. Like, no one would have seen this, but having that second source of income, is beneficial. And Vicki wrote 2 books that are wonderful. To help people reach their goals. But that brings me to the next question, Vicki. And, in your professional opinion, what do you think needs to be a priority, building savings or paying off debt? Because obviously both are pieces to the puzzle.
I mean, Howard, I'm sure you're going to agree with me. Debt is our enemy. It is a bad thing. Debt causes stress. And stress then causes illnesses to happen. When we're stressed and our body is knowing we're in a stress mode or survival mode, we are going to get sick. And this COVID thing, I don't know about all you all, I've been out of my mind with stress. I've even told Analisa, I feel like I'm living a nightmare that I can't get out of. The stress is real for a lot of us, most of us. And if we are constantly in a stress mode, whether we're in debt or swallowing down debt or charging more, the holidays were here. My kids didn't give me Christmas presents. I just told them, you know what, our health is our present. I gave them a card and said, I wish you guys, the very best this next year, but there's no presents. And so when things are tough and tight, I want them to understand this isn't a free ride. They're 34 and 35 years old. Sure, I could have given them a couple $100, but I wanted them to understand that this is not normal times right now. There were no presents under the tree. There wasn't. I mean, I got my 2 grandkids a basketball each. That was it. And they're like, well, Nana, you normally give us a lot of presents. It's like, it's a different year this year. So we can't live as if everything is normal when the holidays or birthdays come. I didn't have a Christmas party or a holiday party because that was expensive. And so I am adapting to the environment we're in right now. Could I afford presents for the kids? And could I afford? Yeah, but I don't want to portray that. And I also don't have the income coming in that I did last year because of COVID. So we're all affected by this, except Howard. Your business is probably booming because of the Debt.com, right?
Well, I don't know about not being affected. Obviously, I think everybody is affected by these times. I will tell you, by the way, I need to join your family because my kids were hitting me up left and right. So
mine too.
They just weren't going to get it. So
I will tell you that things are changing, but as the eternal optimist, as I always have been, I think we're going to be out of this in June. By June, we should be back to normal. However, I believe that this country will be in a recession, and it's going to change a lot of people. We are in a recession, actually, but stock market doesn't think that. But I will tell you that you need to change your lifestyle. The one thing that this new generation doesn't have, and Vicki, you can correct me, I had grandparents that lived through the Depression, and those stories were told to me over and over of how they struggled and how they had to walk 26 miles for a loaf of bread. I don't think my town was more than 5 miles, so they probably walked around in a circle. But in all honesty, those lessons drilled into my head, and frankly, I still live that way. I don't have a big lifestyle. My children have a very big lifestyle, but at the end of the day, they know the value of a dollar, and they know not to get into debt because of what I do. And they have heard me over and over on the phone, on TV, on radio for the last 20 years of their lives, advising people. And at the end of the day, why make the banks rich? Why make the banks rich if you don't have to? Make yourself rich. If you want to be in debt to yourself and pay off your bills when the credit card bills come in every month. Don't say I'm going to do it next month or the month after, because you know what? Something else is going to happen. So make sure you pay off your bills in full when the bills come in, and you should be in good shape and double up on your mortgage and your car payments. Maybe buy a lesser car that you can make bigger payments towards. So there's certain tricks that people need to learn that they just don't teach us in school. I've talked to you a couple times now, and the advice you give is sound, and it makes a lot of sense.
Thank you.
Yes. Howard, I wanted to bring up something else because, prior to getting in touch with you, Vicki and I did, research on debt, because as we said, it's a component to the financial wellness, total financial wellness. One of the things that kept coming up again and again, and there's so many Facebook groups with this, are these people that are credit coaches. And, they call it credit coaches. I can't even think of the other ones. But basically what they do is they have these giant groups, and it didn't quite sound right to me. And they give you instructions, you pay to join or whatever, and they give you instructions on how to dispute everything on your debt. Here's a letter. This is what you send to the credit card company. And these people are going, oh, this is wonderful. I just eliminated $25,000 in debt from my credit card because I sent this letter to a company. And, Vicki and I don't do fake or scammy or anything like that. And it just didn't seem right. And, one of your people did explain a little bit about that. But would you mind explaining to, the people that are attending what that is that these credit coaches are doing in that manner and why it might not be beneficial?
Listen, there are bad apples in every industry, no question. What these people are doing is they're utilizing the Fair Credit Reporting Act, and there's consumer protections within the Fair Credit Reporting Act that allow a consumer to dispute a charge or something that's being reported on their credit bureau, and the companies, the credit bureaus, namely Equifax, Experian, and TransUnion, are required to remove it if they can't verify the information is accurate within 30 days. The challenge is they can put it back on. So people can dispute things, but it can pop back on. I mean, the best way to clean up your credit is don't damage your credit to begin with. That's a lot easier than trying to go back and play the system, so to speak. I will tell you that I have seen many, many players over the years. Some are good, some are bad. Be careful. There's something called the CROA law, which is a law that was written by the Federal Trade Commission, which doesn't allow companies to charge up front before they remove an item. And that is a very, very important law, because before, a company would say, give me $1,000, $500 right now, and I'll clean your credit up. And then they would disappear. So what the Federal Trade Commission, which is obviously located in Florida, in Washington, D.C., came up with was, you can't charge until that company removes the item. And technically, it's removes the item. You can't charge for 6 months after they remove the item. Now, that doesn't make economic sense, obviously, but there are laws to protect consumers from getting scammed. At the end of the day, people need to be very cognizant and very aware of the pitfalls and in the credit world, because we aren't very well educated in the operations of credit. You know, the consumers can get taken advantage of a lot. And frankly, that is why Debt.com, to a certain extent, exists, because we have done the vetting of any partners that we partner with. We go through and do a deep background check, almost a good housekeeping seal of approval. But we do the work that you should do. We just have it done, and anybody that we do business with is typically a very, very good operator and a very good company.
Okay, so Howard, I have a quick question for you. So if somebody's listening on here and they've got 2 or 3 credit cards and they're paying anywhere from 15 to 25% interest, they would call your company, and what would you consolidate this? Let's get into the nitty gritty of what actually does your company do for somebody like that?
That's a great question, Vicki. Basically, we would take a look first at their income. We would say, okay, you're making this. Then we would look at your household expenses. How much are you spending? We would go through and try to make some recommendations where you could possibly save some money. And then we look at your debt, and this is how much debt you have. And this is we break it down by debt, by your creditor, and we're able to figure out a payment. Can you pay this debt? And over time, or if that's the case, can you do it yourself? We come up with options. Can you do it yourself? Maybe. Do you need help and go into what is called a debt management plan? Maybe. Do you need debt settlement, which is much more aggressive, but it saves you a lot of different money, much more money than a typical debt management plan would, but there's consequences. Or maybe you're so far gone you need bankruptcy, but at the end of the day, we try to avoid the bankruptcy, the B word, as much as possible, and only use that suggestion in extreme cases.
Thank you for your explanation, Howard. You pretty much answered my next question that I had for you. So what I am going to do, let me see, because I'm kind of going back and forth. I see that there are some questions here from people. Oh, shoot. So I'm just going to open it up to questions from people, because I think you guys have given, a great explanation. And just to let everybody know, Vicki does have a unique link for people to contact your company, Howard, to get more information. And I am going to post that after this, and I'll just put it in the group up at the top. Let me see here. Looking for the questions. Howard, how do I get my Parent Plus loan forbearance? Is that something you guys can do? Should, this person just request more information through Vicki's link? Or is that not something your company can do?
I mean, there is a tremendous amount of information on Debt.com about student loans, the various student loans. There's so many programs out there, but overall, a Parent Plus loan is a federally backed student loan, and there is a deferment in place at least till the end of this year. You can call up the servicer and ask for further deference, and they most likely will accommodate you. I mean, eventually, you got to understand that when all these people are deferring payments, including on your mortgage, on your car payment, on your student loans, and your credit cards, it's not smart. It may save you cash right then and there, but they're still charging you compounded interest all along. So all you're doing is kicking the can down the road, and you're going to end up paying more. So,
but didn't the CARES Act that was signed in April, maybe timeframe, that eliminated the federal student loan interest rate? So is that going to compound?
It's going to compound. At the end of the day, you're kicking that can down the road.
Right. Right. And you do realize that the end of the year is tomorrow. You just said the end of the year.
I know what I said.
I can't figure out what day it is.
Student loans, they deferred the student loans another month. They haven't till the end of January, to my understanding. So
is that in the new bill? I have not read all 5,000 pages.
Before the new bill came out. But, listen, kicking the can down the road is just not smart. You got to attack this is a great time to pay off your debt if your bills are deferred. So you got to be careful.
Right. It's just unfortunately, so many people losing the jobs. I mean, it's just like we say, it's unprecedented time. Like, it's just incomprehensible what some people are faced with. Their businesses being shut and their hands are tied from being able to make an income. It's never seen something.
It's the case, but can somebody, maybe Vicki can explain why the stock market is at an all-time high, because it makes no sense to me.
Yeah, I can't make sense of it either. I mean, I'm always erring on the side of caution when I deal with my clients that are getting ready to retirement. We use the rule of age minus 100, which is a known rule for over 100 years. It was created by Vanguard, the founder of Vanguard. But when you look at whether the stock market is going good or whether it isn't, and if you're proportioned correctly on your risk allocation, whatever the market makes is an asset or a benefit. But you shouldn't have 100% of your eggs in that basket as you're approaching retirement. I don't know if you feel the same way I do, but I do retirement planning and I figure out a way for people to retire. And when I see them banking on the stock market to get them rich, those are the ones that came into me in 2008 and 2002 said, why didn't I listen to you? I had 100% in the market and I lost 50% of my portfolio 2 years away from retiring. Guess what?
It happens. Unfortunately, it also happens that people that were closer to retirement, the old rule of thumb was put more money in bonds so you have that steady income. But now bonds,
annuity, because interest rates go up, bonds are going to crash. So
right.
No.
And that's going to be another live, definitely, because Howard, you're going to have to check this out, because I have actually been fortunate enough to attend some of Vicki's seminars in person, and we're going to definitely pull pieces out of them and do this as a live. But I can tell you that, just watching her, I'm mesmerized at the way that she talks and explains things to people. And I mean, I thought I knew stuff. I've been in this business 17 years, but I learned stuff talking to Vicki all the time. Like, just,
the rule is keep it simple, stupid, kiss, right?
Right.
Keep it stupid.
We know that I'm stupid with a lot of stuff.
It's not that hard.
But no, it's
that
we're
hard.
gonna.
What happened?
I think we lost her.
Okay,
Whoa.
so we have another question. Maybe Vicki, you can. This is probably better for you, but it said, can you explain the merits of a snowball method, paying your smallest loan first versus making larger payments towards the highest, or actually both of you? Like, what do you guys feel is best when it comes to debt management? High interest or low debt? Snowball it.
Ladies first.
Okay, so we actually wrote a book on this, Analisa, and I am a big believer in getting the high interest credit card away, done, finished. So if there's a consolidation opportunity to consolidate all of them into a low interest rate for maybe 12 months. I know there's a lot of credit card companies out there that are offering this, but you can't extend it over that 12 months or that rate's going to shoot through the roof. So if you've got an opportunity to consolidate it, get it all in one bucket, pay that thing down in 12 months, and then it's finished, that would be ideal. But obviously, if you've got a 20% interest rate, a 2% interest rate, hopefully you all are saying, I got to get rid of that 20% interest rate. Get that thing off the books, get it finished, create a budget. So if it's $5,000, you want to pay it off in 12 months, you got to figure out it's going to cost you $6,000 a month, you got to get that finished. So there's, because I added in the interest rate, $7,200. So whatever it is, get it down, get it in the budget, finish it. Don't buy anything you don't need for those 12 months. Get that credit card done, finished, get on to the next one, or do a consolidation. Howard, do you agree?
I agree. I have a little different spin on it, but I agree in principle with everything you just said. If you have regardless of the balance, you have to attack that highest interest rate first. You make payments towards that. I always recommend trying to, at the very least, triple the minimum payment if you can. Take that, knock that one out, then go after the next highest and start making large payments towards that. Pay it off in chunks if you can, and then go one by one by one. The other thing is, Vicki says try to do a balance transfer or consolidate, but you have to be very careful about balance transfers because there's some teeth in those. They may say no interest for 6 months. Well, guess what? That's great. But then what interest rate are you going to pay after 6 months? You may end up paying a higher interest rate than you were before you consolidated. So you got to really understand the offer and be very, very careful. And one other thing that I see is when stores promote no payments for a year, which is a great opportunity as long as you pay off your debt. I have seen where no payments for a year, but then if you don't pay it in full at the end of that year, they back charge you all the interest for the entire year and add it to your balance. And typically, private store credit is charged at a rate of 25% or higher. So it's very, very expensive debt if you're not careful.
So Howard, but one of your programs, isn't that something that you guys do for people, is help them consolidate and pay off the credit cards versus them trying to do it on their own?
Right. It is called a debt management plan, and Debt.com offers this through one of our partners. And basically, we go through, as I said before, figure out your income, your expenses, figure out the payment for your credit cards. The service then negotiates with your creditors, each individual one, to lower your interest rate, but we get you out of debt in a very short period of time. If you have $10,000 worth of debt, you may end up making minimum payments for 15 years. In our programs, you're going to be out of debt in 3 to 4 years. The reason is we tried not only to negotiate the payments down, and usually our payments are 30 to 50% lower than what you're paying right now. But you're going to pay it off in a third of the time also. And the reason why is because consumers right now, if you're playing the minimum payment game, 75% of your payments are going towards interest and 25% is going towards principal. So when we kind of turn that on its head, where 25% of your payment still goes towards interest, but 75% of your payment goes to reducing your principal, the amount you owe. And that's how we could get you out of debt in a very, very short period of time.
Thank you so much for that explanation, because I'm excited, and so is Vicki, to be able to offer this to the members, because yes, you can do it on your own, but that doesn't mean that you're doing it right. And, sometimes you just have to outsource to an expert. And I was impressed when I learned about, the way that you guys actually manage that, and, can leave that for people that are interested to contact you to find out more about how it goes. But, sounds like a great option for many people. Vicki, there's another question from somebody. What are your thoughts of leasing versus buying a car?
Well, I've always leased my cars, and Howard, I don't know if you're going to agree with me on this. I own a business, so for me, I lease cars. I don't buy my cars because I don't keep my cars. I don't. I'm a flipper. I flip my cars every 2 years because I get bored of my cars, and whether it's right or wrong, my kids own their cars outright. I don't. I can write it off through my business, and there's going to be a day and time where I'll go in and slap the money down to buy a car for cash, a used one. I will never buy a new one. But I've spoiled myself with new cars every 3 years, and I've been doing it for 20 years. And that doesn't work if you're going to buy a car. You cannot flip your car every 2 to 3 years because the depreciation hits you right away. So for me, it works to lease. I don't know their situation. So, but there's a lot of differences. I pay less on my car per month than I would have if I bought it, dollar for dollar. So, but that works for me. And I run it every which way, upside down with my CPA and myself. And the way I manage my cars, I don't keep them.
And Howard, what's your thoughts on that?
It works if you own your own business, but the majority of cars are being leased to people that don't own their own businesses. And essentially, first of all, I've never leased a car in my life, ever. And I drive my cars until the wheels fall off.
There you go. There's the difference.
There is a difference because I don't care. I really don't care. Now, and you're going to laugh at me because I haven't had a brand new car in 15 years. The reality is my wife, she has the brand new car and then gives it to me. Now, she has very good taste in cars, thank God, so I don't drive around in a piece of junk. But I will tell you that from a dollar cost advantage, leasing is not a very smart thing because you build up no equity if you're leasing, and by the end of the lease you spent maybe $20,000 and you have nothing to show for it. The best thing is buy a car. The best advice is to buy a 1-year-old car, let somebody else take the depreciation hit,
right.
Then buy that car and drive it into the ground for the next 5 or 6, maybe even 7 years. That's the smartest thing. Now, I own my own business also, and I still don't lease a car. That doesn't mean that if you own your own business, you shouldn't lease a car. I'm saying there are very good tax advantages, especially somebody in your profession, Vicki. There's massive tax advantages for leasing. That said,
I don't keep my cars long. There's the difference. If you don't keep your cars till they drive, 15 years old, then I would definitely buy.
I don't have a car that's 15. I don't think any car can last 15 years, but I will tell you that I do typically put 90 to 100,000 miles on a car and then get rid of it. But I take the best car possible and kill it. So who knows if you're right, if I'm right, I don't know.
I think it's great to have different perspectives. I mean,
right. At the end of the day, my car, it's still worth $20,000, $30,000, $40,000 when I turn it in with 100,000 miles on it.
Vicki's car is like a party on wheels with your lights.
It's fun. I got the disco lights going on.
I know.
I'm an Uber driver, Vicki.
Her car like hugs you when you go around a corner. It's fun. Let's see. Oh, shoot. Okay, here's another question. We are older parents with one child. Outside of life insurance, what would be the best way to accumulate savings for a college fund these days?
Well, there's lots of opportunities. You can do the 529 plan. The cover dolls are only going to allow you $2,000 a year, but for me, when I put Michael Brand through college, I was so scared to get into debt. So I put them in a junior college for 2 years, and I paid cash, and it was cheap. And then they went to a 2-year college that I could afford. I think a lot of mistakes, people are sending these kids off to these big name colleges. It doesn't matter. It doesn't matter unless they're going to be some special person that needs this USC or UCLA or, my daughter got a beautiful education in Susan Pacific. It was a Christian school. 2 years, she went 2 years to community college, and I didn't go into debt. I think that's our biggest thing is not only how do we save, but how do we make sure we can afford the college that we're sending our kids to? They all don't need a big name SEC 12 school. Do you agree, Howard?
Listen, college is expensive. It's disturbingly expensive. It's the only business I know that can raise its prices on average 8 to 9% and get away with it every year. It's nuts. Now, I will tell you that there are many, many options out there. One is, as Vicki said, a 529 plan is a great option. The 529 plan, you have to check your state to see if there's tax benefits. Some states allow you to take the first $2,000 or $2,500 of what you put into this plan and take it as a credit against your state tax return, which is tremendous. Others don't have that option, but there are many differences between 529 plans, and there are websites available that you can look for to find out all the specifics on each state's 529 plan. I particularly like the Utah plan because it's designed by Vanguard is the investment, so the investments are cheap. But there are some very, very good plans out there, and I'm sure, Vicki, you have your favorites as well, and you can recommend some. There are also different tax savings programs, the Coverdale, which I thought expired, if I wasn't mistaken.
And there's also grants available. There's also opportunities to get grants. And a lot of people don't even understand that. You can go to the college of your choice and look for a grant. There's people that are doing grants out.
There's also prepaid college
For certain
states that allow you to lock in your tuition at today's price, even though your kid may not be going to college in 18 years. Now, the bad part is if they don't go to a state school, they still take a lot of states have come. Sometimes they just give you your money back. Right. Some states are nice enough to just give you the equivalent of the tuition to put towards the college's tuition. Now, I will tell you, having two children that are both in college in private schools, we are paying a lot of money for their education, and at least one has an academic scholarship, and I will tell you that does come in handy. However, the fact of the matter is college is expensive, and I think, Vicki, you have the right idea. When you send a kid to community college, you're getting a good education. They're using the same books.
Gotcha.
The teachers are very, very good, qualified. They may not get the full college experience, but it is less expensive.
I don't care. They can go have their own experience on their own dime. I told them, I'll get you educated, but we're going to do it my way. And guess what? They both graduated. They both had an incredible 2 years at their perfect colleges. Michael actually went to University of Colorado Boulder for 4 years. He became a resident, and we got him emancipated. And there was a lot of different things that we could do and did, and we did it very legally. But at the end of the day, I wasn't going to saddle myself as a single mother with $100,000 student loan debt. I wasn't going to do it. They either get educated my way or they go to work right away. And
Vicki, I'm thinking of sending my two children over to you to raise them going forward for the next couple of years.
You know what? I did a really good job. I'm super proud of what I did. I was tough. I was tough, but I was raised in a tough environment. My parents, we never could allow ourselves to get into trouble. There was no drinking, there was no smoking. We went to school and we worked hard. And my dad had us on the job, scrapping jobs in construction, high-rise buildings when we were 13 years old. So I think it's all how you raise your kids, how they're going to raise their kids.
No question, no question. I mean, I will tell you that the one thing I have never skimped on is education.
Yeah,
and at the end of the day, You know, you're talking to a guy who has made a lot of investments over the years, a lot. And some have been good, some have been great, and some of them not so good. And the best investment that I have ever made is in an education. Invest in yourself.
Amen to
You know,
that.
I agree with that, but you know, I don't know what your kids' experience is right now, Howard, but I mean, I've got a senior in college and it's unbelievable. I begged him not to go this semester because it's remote. These classes are online. I'm paying full tuition. There's so many universities. I mean, Stanford sent all these kids home and they're paying Stanford tuition, which is unbelievable. You don't get the same education online. And I have a junior in high school and she's taking concurrent college classes. She's not doing the AP because if you don't get the right test, but she's actually taking classes where she's getting college credit. And I'm hoping that she's going to graduate with freshman year under her belt. So then I will only have to pay for 3. But I've said, if you don't have the in-person experience, you're going to community college. You can find a job that you don't need a college education. I mean, my dad's been in insurance since I was 6 weeks old, and I told you I'm going to be 51 next week. He doesn't have an official college education, and he's provided for our family and the insurance for 51 years. I mean, there are avenues to make a decent living without it, and I'm not going to put my kids into debt or pay for them to sit in a dorm room and not interact with people because of this pandemic.
I totally agree. I mean,
Yeah.
listen, I am paying for nothing right now. It is, they're not getting educated. Like a lot of kids, it's very tough to learn on remotely. And the fact of the matter is you have to do that evaluation. Now, I will tell you that week after each kid was born, I did invest in a 529 plan, so it doesn't hurt as much. So their college is paid for, but I mean, listen, there's plenty of programs, and you're doing the right thing, by the way. If your budget doesn't allow you to pay for a 4-year school, you'll get a fine education.
But even like Vicki said, even if your budget allows it, doesn't always make the most financial sense from a financial wellness perspective.
It's the difference in a down payment on a house. Like seriously, these kids need to own their homes, and there's lots of things we can talk about what to do with money. First thing is you need to get your debt down. Then you got to figure out how to.
And here's another question, kind of back on that line.
Does it make financial sense? No, but I'm doing it for selfish reasons. I want them out of my house.
Here's one other question, Vicki. How much money should people have in their emergency fund?
Well, I say a year. Some people say 6 months. I'm over conservative on everything. If you had a year in your savings right now and you had to blow through that versus going into credit card debt, you're still okay. I mean, when you have 1 month of security in your savings account and you lost your job for 10 months, you're going on credit card debt. So I say a year.
So with that, do you think, do you feel like it is a priority? Like if somebody has, just a limited amount of income, and obviously we're proponents of the side hustle to help bridge that, but let's just say they can't and this is their job. Do you think that their priority should be towards building their savings account or paying off their credit card? If they're not using the credit card, I guess we should put that stipulation.
Why do you have to ask such difficult questions?
Oh, girl, you know the answer to this.
Well, again, they have to have both. They have to have that credit card gone. I mean, but
right.
Like Howard had said in the very beginning, if you have your credit card debt gone and you've got nothing in savings, you're going to go back to the credit card debt to live. Mm-hmm. So I like the savings, but I like them both. I like having the credit card debt gone. Don't secure your home. Don't take a line of credit on your home, a secured asset into an unsecured asset. Mm-hmm. Everybody knows the difference, right? Security means we have a car that's paid for and we're going to collateralize that for a loan, or we have a house that's got equity in it. We're going to go take that equity out. Now you just increased your debt on a secured loan, which obviously we want to get that debt down.
And I think, Vicki, we had a conversation a while back where there's different financial people. And one is a huge advocate of, make sure you have zero debt, have $1,000 in emergency fund. And I remember, asking you, I said, well, what's your perspective? And you're like, $1,000 isn't going to do anything. Another thing that you said and made perfect sense. I mean, these people that losing everything due to COVID, your paid off house and all that stuff is not going to put food on the table, but a well-stocked emergency fund will. And that really, stayed with me and makes sense. And me, I'm trying to build a savings as much as possible.
As Howard, we said when we talked to our grandparents, cash is king. And when you're in this disastrous place that we all are in because of COVID, cash is king. And, we talk about selling your things on, Facebook Marketplace. I bought a kayak 3 days ago on Facebook Marketplace for $80. It's been beat up, but guess what? My house in North Carolina is going to be a rental property. I got 2 rowers, whatever those are, the weight things. I got 2 on Amazon for $20. So for $100, I got a kayak and 2 oars. And I was looking at buying a new one, $500, $600. No, you can be super conservative and have a kayak on a lake, or you can sell your kayak you're not using to get money. So there's all different creative things you can do. I can afford a new kayak. The whole point was I wasn't going to buy a new kayak. I wanted to buy a used one, and I wanted to buy one that will float, doesn't have a hole in it. I put it in, I sat in it, I didn't sink, so I'm a happy girl. So, at the end of the day, but if somebody sold their kayak they weren't using for $80, I was a buyer of that kayak for $80.
It's a great deal, and you don't care if it sinks as long as you're not on it.
Everybody's happy. So that's the point, the side hustle. Sell the stuff you're not using. Sell the stuff you don't need. Guess what? There's going to be somebody out there like me that needs it and wants it and will buy it.
That's a very good advice. Very good.
You got to live the talk and walk the walk, Howard.
I hear you, kid. I hear you. I will tell you that, a lot of people spend a lot of money on stupid stuff that you don't need to spend money on. Getting back to your question towards Vicki, I take a little different approach to that, which is good. I think a year is too long. I think the rule of thumb is actually 6 months cash in the bank. However, if you have credit card debt, that 6 months is a lot of money. So that 6 months I would reduce to 3 months living expenses, and everything else goes towards knocking down your debt. The problem is, I believe Mass Mutual came out with a survey this year that said most Americans don't even have the money to take care of a $400 emergency expense. People are only living paycheck to paycheck. And it's very sad that the richest, how can we be the wealthiest country in the world when all your people are broke? That's a pretty sad thing that they found.
Well, and Vicki and I talk about this too. I mean, I'm in Colorado, and I say that I live in Orange County, Colorado. I mean, it's like identical, like politically, everything. And there are people that, Vicki and I both see that have high expenses and high incomes, and it doesn't help them, like, and Vicki always says, live below your means. I mean, there's something to be said, because, just because you can afford something doesn't mean you should buy it. Like Vicki in the kayak, just because she can't afford it doesn't mean she's going to. But I think that's also the mentality of, I can have this expensive house, or I can, wear name brand clothes for everything and all that kind of stuff. And it's getting a lot of people in trouble, not to mention layoffs.
People finance. I mean, it's the same thing. And in general, guys, when you lease a car, and I'm sure Vicki doesn't have this, but you're basically leasing a car because you're financing a lifestyle that you can't afford. And that goes with a lot of things. If you can't afford to pay off your debts in full every month, you shouldn't be buying things. So you got to be very, very careful of what you spend, when you spend it, and make sure that you can afford it. And do you need to drive a Cadillac when your budget says you're more fit for a Chevy? Just be careful.
I agree. And you know what? I think that's what's great about this group is that, there's so many people that just really didn't learn. growing up through no fault of their own. Maybe their parents didn't teach them or were bad examples, and they don't know how to budget. They're in debt. They don't know how to get out of debt. They didn't know what a side hustle is. They don't know how to start it. So I really feel like this is such a great beneficial group, that there are so many resources for people from all starting points. And, everyone, I don't blame people for not knowing things, because we all have to start somewhere.
The good news is there's tomorrow and there's today, and we can change it. We're at our 2 o'clock mark here at Pacific time. I got another Zoom call to get on.
All right.
So, Howard, I want to thank you for being such a good role model and mentor to so many people. And I know they're going to benefit from you and me and Analisa. And I just want to wish everybody on this call a happy, safe New Year. Don't forget to whoop it up when you can, because, I like to whoop it up. Howard, do you even know what that means?
Just be in by 10 o'clock, Vicki. You cannot stay out late.
No, we can go to midnight here. Howard, do you even know what whoop it up means?
Whoop it up. I know what whoop it up means, kid.
Okay, well, good. I don't have to teach
Let's
you that.
whoop it up in 2021.
2021.
Thank you. I'm going to go
Thank you
ahead
for
and I'm
having
going to post the link. I'm going to post the link after this. So if people want to contact you, Howard, they can do it through Vicki's thing. And then they know that that's how you'll know that they got there through Vicki.
Terrific. Thank you so
All
much.
right.
Have a happy
Thank
New Year.
you. All right. Good luck, Vicki.